All right, this is the live chart of the S&P 500 ES futures. So we're going to have the range trader on 1 minute. So it's going to be a little busy here, but basically what we're going to do is wait for this announcement to come through, and then we're going to get a range established here, and I'll read off the headlines here in a couple minutes as they come through. We've got about 3 more minutes for that.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening. Hey guys, I'm going to mute my mic and let Phil do his play-by-play. I'll be watching the chat so we don't have any distractions.
So Bitcoin poked a new high. We got a lot of positive ticks. Just waiting for the initial range to go in here, guys. That's all. That and the headlines. Some additional rate increases may be appropriate. They did hike by a 1/4 point despite the turmoil in the banking sector. So pretty much what we thought they would do, Bob. Some additional policy firming may be appropriate. So initial reaction is up, which is pretty meaningless these days.
SPY's not exactly lighting the world on fire here, Phil.
No.
But SARK's not doing anything either. I wonder if everything's kind of stuck here. So the initial move was higher. He's going to do a presser, right, Phil?
Yeah, he's going to do a presser. I'm waiting for more headlines to come in here. Fed vote in favor of policy was unanimous. Fed's median view of Fed funds rate at end of 2025 is 3.1%. That's the same as the previous projection by them. So unanimous vote for 1/4 point, and we're not getting much out of the initial presser so far as talking points. He's probably going to save that for the presser. And so basically 1/4 point, and they've signaled that they're not done hiking.
So as if the bank disaster never even occurred.
Yeah, he's on the mission. That's what we figured. He'd be on the mission.
They're trying to lift SPY up now, though.
Could go as high as 40.95, but it's going to have to clear the 40.60 region first. Could stop here.
You're talking about ES, right, Phil?
Talking about ES, yep.
Mm-hmm. These options aren't really moving. Mara seems unbothered by it.
Yeah, Bitcoin's, see what we got here. So Bitcoin did the wick. We got down to 28,100. That's it. That's pretty bullish. We can't really make any assumptions until after the presser is all said and done. So
let me look here to see what's really moving here. Nvidia hit the line where you should take it short. 273 has just been established.
Okay, so let's see if this high holds here.
Microsoft's up $5. Meta's up $4. The Qs are up $3. CRM's up $2. UPS is up $2. Tesla's up $2.
If they're going to, let me put a different cursor on here so you guys can see. If they're going to hold this, I'd watch for this wick to hold on the 1 minute, and they could backtest as high as like 40.63 maybe, but because this is a zone where this could be the top end of this move here. And the reason why I say that is because there's gamma built up from the options market in this area, and those areas act as resistance, because primarily these days most of the market moves are driven from the derivative side, and more so now with 0 DTE options, 0 days to expiration, really drives a lot of the flows today. So if you don't know where those levels are, you're at a disadvantage, especially if you're trying to day trade this stuff. Getting a trifecta here on the 1 minute. All the cycles are lining up.
I'm starting to see some slow pullbacks here now, Phil.
So what they do, it's almost like that first move is like no matter how high it goes, it gets totally retraced. So the next thing up is the FOMC presser, which is this box over here, and then he'll start talking. So as you guys can see, we're kind of doing an Eiffel Tower back down. Let's see if they hold 50% of them retrace. See if they hold 40, 46, 75. If they don't, starts breaking below it, then we'll start looking for the full round trip back to the 40, 34 open. I suspect we're going to see some really you'll just get some outlandish squirts here. So not the most favorable environment. But right now, this area up here, this is if these guys want to push higher, they're going to have to start pushing back over 40.63. Otherwise, bears are in control right at the moment. Nitro burp. Nitro. Nitro's like our in-house doctor. He gives us health checkups.
Mhm.
All right, we're losing the 50% retrace. See what Bitcoin's doing. So Bitcoin, so not a surprise here, right? You get the Darth Maul candle. Darth Maul, because it looks like Darth Maul's lightsaber. So they cleared out, basically what this is doing is clearing out stops at the highs, clearing out stops below. I believe we've got stops hanging out at 27,700 last time I checked. There's probably some liquidations there, but the area that I'm looking at is the let's see here, 27. See, we never over the weekend, we never came out of the weekend and we never really back tested where the CME closed on Friday. And usually they like to get that level. So I'm keeping an eye if there's any weakness to the downside, if there's any move lower off the presser, seeing if they come back, grab this 26,800 level and then bounce it. Because right now, the shaded red area is resistance from higher time frames in the past. So we're just working our way through now, getting back over it, flipping 28,225 to support for Bitcoin, and really bullish if that's all we're going to get. And if it can break over 29,370, that's going to open up a lot to the upside for Bitcoin up to, that's where you're going to get into that 30K. And if the bullish case for Bitcoin is to keep going into, seasonality where it goes up into June or whatever, then you'd want to see that 30K area consolidate. And then you're going to get like one final wave up to 40 and change, would be like a 50% retrace of the move. That's a scenario that could certainly play out when Bitcoin gets into this mode.
Yeah, and our system triggered a channel top sell for NVIDIA, in case anybody's interested. 273 was the tag.
The Lin Reg?
Yep. And so it's been a pretty big move on NVIDIA. So if you guys are ballsy, do a credit spread, or you can buy some puts if you want to give yourself some time.
Oh, look, it almost got to the top. I've noticed those inverted hammers off that channel are pretty decent entries too. Yeah, Bob, that last one triggered and you got basically the last swing low before this. I think this is the final gasp for air. I really do. I would watch this hourly inverted hammer up here on NVIDIA, especially if, let's turn it into a swing failure here. See where are we on the daily chart? Yeah, see, so this is an interesting spot for NVIDIA because we are getting into, let me draw up a rectangle here. So that zone, if we zoom back to a 60 minute, yeah, so a failure here would be pretty tempting to get short.
Pretty devastating, I think.
Because that makes a lot of sense on the higher time frame chart to fail there.
Yeah, Zippy, you can do a bear spread.
All right, so we almost got back to the announcement takeoff point at 40.33. Again, this is a lot of just now this is the pre-presser posturing. So the 1 minute's going into what we consider the Ranger buy zone. And, you get a little bit of reaction here, but I personally think this is probably going to flip and break down some more. You can see we had our trifecta here. That when all that lines up, those are pretty powerful. That's what we like to see.
Just so you guys know, typically on a 5-week option expiration period, which we've had this month, and you have a Fed the same day, it's usually Wednesday, the bulls have it, and then Thursday you get a really, really sharp sell-off. So I'm positioning for, unless we really break down once he starts talking, I'm gonna buy some puts for a move down into tomorrow. You want to see our thoughts, Lisa, or do you want to hear our thoughts? Just I like to see Phil's thoughts sometimes too. Be kind of scary though.
Be very wholesome.
Yeah, Zippy, I'm looking at maybe 395s, and I'll probably put them up to Monday because whatever happens tomorrow, I think it'll be a Thursday, Friday, Monday kind of event.
I'm just drawing the range box here. I'm not saying this is the range so far.
BTU is still green, so I'm just going to run through some of these numbers until he starts pressuring. Okay, Square's down a lot. Well, I guess they call it block now. Coinbase, guys, we have one of the systems that we have is ability to see reversal areas on the hourly and do spreads against it. We did a Coinbase credit spread here this morning based on it tagging the upper end of our channel, and that thing is paying us right now. And so just FYI on that, we put that trade out for everybody, not just the VIPers.
Be honest with you guys, this is a pretty muted reaction so far.
Yeah, they really ran it up into it though too, Phil.
Yeah, it's definitely buy the rumor, sell the news for sure.
Yeah, AbbVie's down, Bill Pay's down, JP Morgan's down, Datadog's down, ExxonMobil. You got the Timken Steel Company, the Timken Company, Snowflake is down. Tesla was up $2, now it's going flat. EQT, which is a natural gas company's down, Oxy's down, ARC is down. So let's take a look at the other way. Let's see what's popping here. Okay, Bitcoin's up 380. Nvidia, we've been talking about Nvidia. Microsoft's up $5. Beyond Entech is up $3. Still outside of our spread. Q's up $2. TNK Shippers up. Apple's still up. CRM is still up. Visa's up. Nuggets up, Spy's struggling, it's only up 50 cents. Symbotic, which is a stock that we trade a lot in the room, although a lot of it just really ripped the last couple days, up like $6-7. That's SYM for those who aren't members. Zim is up $1. Wayfair is up, unbelievable. Now you know it's the garbage stocks are up. Wayfair, who's buying furniture, high-end furniture right now? I mean, you'd be able to have a home in a year. Oil's up, shippers are up, TLT's green. Everything else is pretty flat beyond that, Phil. That's what we got.
Bob, where do we see Bitcoin by Christmas? This coming Christmas?
Million.
Yeah, million. Look, I think it's gonna be like gold, and I think that the last week has really changed things as far as like there's been a paradigm shift in its relationship to this market. It was pretty much coupled to the SPX. It's decoupled, behaving more like gold. And if you look at how gold behaved when the bonds reversed direction, right? They've been inverting, and that changed last week. Big bond shift, seismic shift, and both Bitcoin and gold just basically decoupled from the market and went up. And so that tells me that, okay, we're in bond reversal season. And when that happens, it's a long road to get back to normalizing the yield curve back up to 2.3%. And so it's actually really good for if you like Bitcoin and holding Bitcoin a long time. This is kind of what we've been waiting for, because this is the first time that Bitcoin will be going through a yield curve inversion back to returning back to a normalization of the yield curve. And then a recession, I believe, is going to be coming. So this is all new territory for Bitcoin. So how its relationship or how it was going to behave was unknown. So now we're starting to get a look at that. So my answer to the Christmas thing would probably be that we're probably going to get some kind of pullback in the market that's rather steep between now and then. Both Bitcoin and gold won't be immune to that. However, I do not think we're going to see lower lows. I think that based on what you could see, the last two times we had recession in this behavior, gold had higher lows. And that's really the only thing we can reference because there was no Bitcoin. So my belief would be we do something similar, and that would imply that the lows are in. Could we come back down and back test 20K or something like that? Sure. But I would not be quick to fade the move on Bitcoin at this point, because I think you have a seismic shift on how this market is treating it now. Gold and Bitcoin, I think, should move pretty similarly now. Bob, JJ wants a Hummingbird 2.0 event.
I'm answering him right now.
Spinavane. The liquidity injection last week was a little weird because it wasn't like, when they're expanding their balance sheet, they're buying, treasuries from Yellen, let's say, right? And that's guaranteed going into the market. So what they did was they injected liquidity, but it was kind of like as a backstop, which is a little different than normal balance sheet expansion. So there's been a great debate on whether or not that's going to add net liquidity to the market. And I can see the argument, but to me, I look at it like if you are looking at, like, you're on a beach and you're looking down at the sand and there's a hole in the sand and you're going to go grab some sand and fill the hole back up to even. Well, the sand that was in that hole went somewhere, right? So you're adding, at the end of the day, you're adding more liquidity into the system. So, they can say that they lost money on those bonds. Well, somebody sold them those bonds, right? So the money was transferred. You're adding more liquidity into the system. So to me, you're either adding liquidity to the system or you're not. And the effects of which are a little harder to predict in this situation. But I think on net, it still puts a bid under the market, maybe not to a degree that a normal balance sheet expansion would do, because this money won't be so quick to get out to the market, but it keeps the wheels turning. So you have that where they're adding liquidity. And I just think that we'll have to see. It's kind of a wait and see. My thought is that it's just not going to be as impactful, but it will be impactful. Like, it will help the market go up. And it's inflationary too. That's inflationary. So I didn't think they were going to pause here because of that. And we saw inflation numbers come in overnight from Europe, and that also gave Powell cover to keep hiking. So I think they're going to stay the course. They have to, maybe they'll accelerate the balance sheet roll off, because what happened was the banks with this new bank funding program, what is it, BTFP, that's actually going to make the banks want to buy things like the MBS, mortgage-backed security products and things like that, and that can help the Fed offload those. So it's an interesting solution, and it actually might put the Fed in a better position. But I think it's setting us up for more hikes and ultimately more credit contraction. They want these banks to stop loaning money out. So only the best of the best for credit are going to get loans going forward, I think, over the next year. Thanks, Sean. Appreciate it. So I think we're just in a holding pattern for this presser. We'll have some more. We're going to have a lot more headlines come out now. That I've been noticing lately that the headlines on the actual rate announcement, very little. They kind of hold back and give it to us all at the presser. So he'll go through with a prepared speech, and then he will do a Q&A.
While he does that, let me look at the market flow, Phil, see what the option people are positioning.
Yeah, good idea.
Okay, so they flip from being, I'm going to do all markets, all, make sure here I got everything, no filtering. Okay, so they've been positioning positively since 10 minutes before the announcement, and the positioning went green. The 0 DTEs have been green all day, pretty much. Okay, and then positioning for tomorrow at the moment is slightly green, which means no coin toss for the next day. So that's kind of where we are right now, Phil.
Okay.
It's interesting. The market's up 91 cents.
So we may have a midpoint here for the range. This might be the range established. We'll see. If he's talking and it works around in here some more, then I'll call this range established for the announcement, and then we should get a push out one way or the other. It's a little small for a range. Typically the ranges have been much bigger, but so far we'll just go with this since it's respecting the midpoint. Looks like you guys are about 10 seconds behind the live stream, just FYI.
Just sit back, smoke them if you got them. I don't know what he could possibly say to people to think that there's more liquidity coming down the line for them to speculate. If you guys are on Twitter, I highly encourage you to read Danielle Martina Booth's her private institutional newsletter that she puts out. She released it publicly for free. It's an eye-opener. If you think we're doomsers, she makes us look positively optimistic. We're going to have 3 waves of bank stress coming. We just hit this one with duration, and then we're going to get hit with a liquidity issue when Yellen starts to go back out into the treasury markets, and then we're going to get hit with default risks, and then we're going to get hit with rollover risks. And it's just the stress on the banking system is going to become acute. And they're just not telling you about it, just totally ignoring it. You know, remember, when they don't tell you things, they're getting out. So just bear that in mind. Nvidia's pushed back up to 374 now. They're just trying to squeeze at this point.
All right, so let's see what he's got for prepared remarks. I believe he is talking. Yep, he's talking. So market's going to be real jiggy here now, guys. Powell says all depositor savings are safe. So what I look for now is which side of this do we break out of? Powell says the Fed, Treasury, and FDIC took decisive actions earlier. Depositor savings are safe.
I don't know how you could say that. 50% are uninsured.
They're probably going to just up the FDIC insurance. They just don't want a bank run because it's going to give them a problem for fighting this inflation fight. So they're going to basically tell you everything's hunky dory.
Yeah, that's for sure.
Powell says he remains strongly committed to bringing inflation to 2%, prepared to use all tools to keep bank systems safe. Inflation remains too high and labor economy is too tight. So far we're hawking. We're still hawking.
Yep, very hawky.
My take is this is a buy the rumor, sell the news event. Find out if this range breaks here. He's still going. Video, what are you doing? You are pulling back a little bit. We're watching NVIDIA because it's just been a darling of this
Momo crowd.
So Bitcoin's actually got its range established, and so we're going to watch to see what breaks first here. You notice it went up in double top there. That's what I consider a weak high. It's kind of a market profile term, and I wouldn't be surprised. But that's a 5-minute chart, so that's a very low time frame to be using for that. Usually you see that stuff on like a 30-minute chart or higher. You mark that, but we'll see what happens. I wouldn't be surprised if we come back up there later and clean that up. It's funny, this 1-minute range trader won't flip.
No, but it's not lifting off like it normally does,
Powell says inflation remains too high. Activity in housing remains weak. We're not getting a ton of newsworthy things out of this yet.
I mean, I don't know what else he could say. He just keeps talking out of
Ooh,
the
we got
same
we got
playbook.
we got charts.
Look at you, man. The media man. I'll be
Oh,
back in a
media
second,
man
guys.
just there we go. My apologies.
Somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation, 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has
Okay, so we're breaking down below the established range. Okay, so to me, the way the algos have been working these announcements is that we'll see a push down. Likely, we see a push back up to the midpoint. We should not see any higher than 40.66. That's how they've been. That's how the algos have been playing this. So let's see if that plays out here. We could come all the way down to like 4,000. We could get a bounce, and it could come all the way back up, back test 40.50. That's where I'd be looking for a failure. If it breaks out, goes back to the other side of the FOMC range, that's an outlier, and that's something they have not been doing. Again, this is a 1 minute chart. 5 minute chart, probably going to stab these lows down here at 40.21, and then we'd be looking for these lows down at 4,003. I think this is the downside target if we get a push. And like I said, I still would expect some sort of retrace back up. That's been kind of the modus operandi of these guys, the algos. Yeah, let's take a look at DXY. I think I got like a kabillion notes on this thing here. So one thing about, probably best to look at this on a dollar. I had some notes here. So I want to see this area hold on dollar. What's interesting is the market's going down, dollar's going down. And what is Bitcoin doing? Bitcoin's giving it up a little bit here. Not surprising. Daily open, weekly open, midpoint of the daily candle, previous day, Monday's midpoint. I think they want this though, guys. I think we want to get the CME close. That would create a little bit of a dunk. Then I want to see a sharp reaction off that. It starts to lose that, we have to look lower. The hourly chart here on Bitcoin. Normally you get a back test of these bands. Haven't really seen that on this move up yet. Good setup here though to do it. Would look for this blue shaded area to hold support, but you can take out these lows. And this is a double, I believe this is a double bottom here. Low there. No, not quite. One of these charts had a double bottom. Okay, so Bitcoin's kind of holding there. Dollar, let's see if dollar holds at this mid. Yeah, let's take a look at gold too. Yeah, so dollar's probably gonna go grab that high at 20. 80. No, gold's being super resilient here. Gold is doing better than Bitcoin at the moment. This is good though, because Bitcoin should end up following suit. It's just that, Bitcoin's had such a ripper move in comparison that Bitcoin can easily come back down. There's a lot. See, think with Bitcoin, right? It's pretty liquid and there's a lot of stops that build up, and they love to go get those stops that are under these lows. So I kind of think that's what's going to happen. And then once they clear some of this, get a little bit more of a retrace, you can see this thing go back up. If we don't see that, then you start looking at, well, are we uncoupling the decouple? All right, so what we'll do is we'll set an alert for 1989 on gold, because that looks to me the nearest upside target to go grab. All right, let's go back to ES. Okay, so there you go, back to the midpoint. Can't say I'm surprised. It's kind of the typical reaction that they do. So this to me is interesting. They do sometimes get a little deeper push up. I'll be very curious if they actually break this. Powell says more headlines. A couple of weeks ago, we thought we'd have to raise the terminal rate, but that was before the banking crisis. We considered a pause, but the hike was supported by strong consensus. The banking system is sound and resilient. Deposit flows in banking system have stabilized. We'll likely need below trend growth for a softer labor market. Reducing inflation is likely to require a period of below trend growth. We'll continue to closely monitor conditions. We'll use all the tools needed. We'll closely monitor incoming data and actual and expected effects of tighter credit. See, they're gonna prep you guys for tighter credit conditions.
Yeah, below trend growth is translation means recession.
Right. Yeah, they can't say the real words.
It's always gobbledygook.
Yeah, Stacy, that would be awesome, because we've been spending many years coupled to the equities. It's been like it wasn't what we were expecting. I mean, still whatever Bitcoin couples to, it does, it outsizes the move. So, but I think the real story is, especially in this environment, when you have the bonds doing what they're doing and we're going into a recession, you most definitely want it to be behaving like gold. Powell says longer-term inflation expectations appear well anchored. The strength of the recent inflation reading shows pressures continue to run high. Wage growth has shown some signs of easing, but inflation remains too high. All right, so I think we're caught up on the cliff notes there. He does say that in assessing the need for further hikes, we'll be particularly focused on actual expected effects of credit tightening. All right, so that's the second time He's been saying that. So to me, that's how you're going to get your recession, and that's how they're going to let the air out of the tires. They can only hike so much more, guys. You can only hike so much, and then you start breaking things. They've already started to break things, but I believe they had a backup plan for the big 8 banks to come in and clean up the mess. But now with those guys cleaning up the mess, now you have less banks to deal with loaning money out, and it's easier to coordinate restriction in credit. So like I said, you're going to need really, really good credit going forward to get any kind of loan. So you want to be careful if you rely on a business that needs loans and cheap loans, cheap debt. You want to rely on investments that rely on cheap debt.
Yeah. Better get your credit score over 700.
Yeah. And honestly, like a really good way to do that, obviously, if you've got delinquencies in your past, there's not a lot you can do that. You could ask for forgiveness, write a letter for forgiveness. They probably won't happen. But if you don't close your credit cards, that's not good. Keep them open. What you can use them for is doing smaller reoccurring transactions. You can set up reloading cash cards at Amazon or elsewhere on a monthly basis. And those little transactions, especially those cards that are dead, and you don't have to reload much. I'm talking like $5. Just the function of those transactions building up across different cards actually will help your credit score out a bunch. So I drew this line here off this wick, and it's something like, notice they haven't taken out the other side. Like, that's important. So to me, I don't know. I can't tell you if they will or not, but if this fails here, I expect this to come back and come through the other side. This would be the first time, I think, that they poke one side of the range and then get back to the other side of the range and get through it if they do. This range is a lot tighter than the previous ones, so maybe that will allow that to happen. But normally that first downside break is the one.
Yeah, they say Powell, compared to other Fed chairs, has the most volatile Fed day of them all. So this is really quite tight.
So interesting range. So this is much different than what they've been doing in the past. Alternatively, what will happen here, since this range was so small, if this comes back to the midpoint, I'll redraw the range to this low and this high, and then we'll see what side they break at that point. Since we're pushing up over 4068, that brings up 4095, and I do believe this is the last hurrah.
Nvidia's at 275 right now. They're just pushing up the Nasdaq hard, like their normal funding source.
Powell said banking strains are so recent, there is so much uncertainty. You think?
Mm-hmm.
Credit tightening could mean less work for rate policy. So I want you guys to make note that all of a sudden you're hearing credit tightening, right? Haven't heard that in any of his pressers so far that I'm aware of, because I think I've heard them all. And now we've heard multiple statements of credit tightening. So it's coming.
They say what happened in the last 2 weeks would be akin to him raising rates 1.5 basis points. Well, I guess 1.5 percentage points, 150 basis points. So that's how tight financial conditions got in 2 weeks. And if you guys watched our podcast yesterday, I put 2 examples out there just to show you guys how it's going to work. There's going to be voluntary and involuntary retrenchment. If you need money desperately, you're going to go through the one where they have to take massive haircuts on their equity value. And if you're voluntary, you're going to be preemptive so you can save cash for a longer run and also raise your cash flow in the future, because cash is going to be valued at a higher level in the past. But before, they didn't care about cash flow. And in the ZERP world, cash is really worthless. It's all about growth. And now cash is king, and it's going to become problematic. All right, Phil, we pushed over the 1 minute channel, coming back in again.
Yeah, I'm gonna watch the reaction back, because I wasn't sure, because this range was so tight. This might actually have to be the range for the FOMC. But what I'm gonna do is I'm gonna wait to see what happens if we come back to the mid. If that holds and then we push back up higher, then I'll leave this. But it would be an outlier because you took out both sides of the range. They haven't been doing that, so it has been taking usually lately all through the presser to determine a direction. Sortie. So, I think it's a matter of like the time frames we're talking about. So we firmly believe we're heading for new lows in this market as we progress through the year. And you basically want, people are looking at this move here like everything's okay. And really what it is just a typical bear market rally, we feel, that gets sold into ultimately, and another lower high. But because of the way that the derivative markets are set up, when you have the VIX contracts which is the volatility index of the markets, when that comes up for expiration, there's usually a lift into that because those hedges are coming off on that expiration. You also have this JP Morgan collar up here, which means it's 40.65 in the S&P 500. So the futures are trading about 30 points higher. So that's this line up here. And that will act as a big magnet potentially into the end of the month. So we could be chopping around here. Now, when that rolls out, when that starts to roll out, that's going to release a lot of hedging around that level. And then maybe it's one of those deals where we're up until the end of the month, kind of at range bound, and then we roll over. Because remember, seasonality, we go up into the end of March. Then we have a little bit of a pullback, and there's another push kind of up into May. And then that May time period into June, July is usually pretty bearish.
He's starting to come off a little bit, Phil, back inside the channel.
So NVIDIA looking pretty strong here. This is where we'd start looking for, it still really hasn't poked out of its linear regression, so nothing to do there.
So Phil,
Yep, we've been cooking up in the lab. Like that signal.
It's gonna be money.
All right. Fed's pal says there's not broad weakness in the banking system. Okay.
Unbelievable.
We don't, well, again, he has to instill the utmost confidence in the banking system right here to help his cause. If he's going to have to deal with more bank runs, it's just going to prolong what he has to do. So even if in reality the banking system's frail here, he's not going to say that. He's going to say the exact opposite. Because at the end of the day, they're going to backstop it anyway. So, it's kind of like, is he lying or is he kind of right in the end?
All right. Here comes bombs away.
So here's the thing on this range. Again, not doing anything, just observing. This might be the actual range we need to look at, this high to low. Normally we get such a big reaction off the initial release that we get our range established pretty quick. It could be that this is the range. Now, let me get rid of this because that's no longer relevant. Just looking at the higher time frames, see if we get a nasty looking wick or not.
So he's not really saying much, huh?
We got a little bit more here. At the basic level, SVB management failed badly. Fed supervisors saw these risks and intervened. We don't know how significant or sustained the effect of this credit tightening will be. That said, we think it's quite real. This argues for being alert when we think of further rate hikes. He says, though, the further rate hikes will be well telegraphed. We don't see progress yet on core services inflation, excluding housing. Inflation data, however, did point to stronger inflation.
What's funny, Phil, is that the regulators saw everything, didn't take action for 4 months. In the meantime, everybody got paid bonuses. Everybody took out massive loans, personal loans from the company, and they cashed out their stock options. Then the regulators took action.
Yeah, it's something they got to do better than that.
There's got to be like a 6-month clawback period. If we got to come in,
I think so.
All stock options have to be clawed back. All loans have to be immediately repaid.
Yep.
Yep. It's just ridiculous.
I agree, 100%.
You and I couldn't get away with this crap.
Yellen's talking too. She said default would cause loss of confidence in the United States and dollar's reserve currency status.
She's yakking too. She's talking over him.
Apparently.
Unbelievable.
Unless that was a headline, but that came out 3 minutes ago.
No, I know. It's just she can't help herself. They're definitely in opposition. What he wants to get done versus what she wants to get done are two different animals.
Well, she's running on fumes. She needs tax receipts bad. I know they don't explain it, but extraordinary measures keep her checking account with some money in it, but it's really low.
Yeah, McCarthy's gonna make them sweat a little bit before he gives up anything.
Yeah, and that'll make the market go down.
Just remember, in the past, what they do is they turn off all non-essential government spending first, and then when it gets even lower, then they prioritize who gets money of the things that are considered important.
Oh, here we go, Bob. We've been vindicated from our videos. Guess what Powell just said? Tighter credit conditions can substitute for rate hikes.
I know.
Did we not tell you guys this?
Guys, you don't even need Powell. Just listen to us, and a week later, everybody else shows up.
That's the solution. Look, to me, it was a question of, well, they're really going to kill the inflation. I think they're actually going to now because he can stop hiking and then they can just turn off credit.
Yep.
And I'm going to tell you guys right now, in the last 10 to 20 years, this economy does not know what that's like. And most market participants that aren't older don't know what that's like. I mean, a much different stock market than you're used to. You're watching the last of all this NVIDIA nonsense, all this stuff. Look, market heard that and they're like, we're out of here. See ya.
Look at this. Look at this dump now.
Yep.
So
they know that's 100% telling you guys, I'm making a recession happen and you're going to like it.
Yeah.
Okay, I'm going to redraw this range now because this is the range encompassing the pressure. This is our 50%. Now let's see what side breaks. I'm going to stick with this. I'm not moving this range anymore. I think this makes more sense.
Okay, we're back to moving VWAP, Phil.
Because he's saying things that are material to this range. And so
I'm sorry, we're back to the 144.
On the 1 minute?
1 minute. I'm watching 1 minute SPY. Phil's on. You're watching ES, right, Phil?
Yeah. The 1 minute should be very similar now.
Yeah. Now if we break below 397.40, then that was our reaction low off the announcement.
Let's see what DXY is doing. Oh, DXY is bouncing. Did it get off that line we showed you guys earlier? Let's see. Oh, it plowed through it. But it hit our Ranger buy zone. The shaded area, dipped a toe in there and retreated.
SARK is moving up nicely, guys.
So here's something. Let's move this down. If we can get back inside this area, which means dollar gets back over 102.96 or 103, that can be a pretty strong reversal. And that was basically your wick low on it. So that's what I would look for here. And now we're getting negative ticks come in. All right, let's go back to ES, the stock market.
All right, boys, we're hugging the 144. This is a little bit different action than we normally see. Normally it's up and away with my beautiful balloon. So SARK needs to blow up higher because they've been using the Cathy Arcs companies to hold the NASDAQ, to hold indexes up.
Oh, Greg. We need a tardy pass. Yeah, Yellen's actually talking over him, Bob.
What's that?
Yellen's actually talking over him. I've never seen that before.
She's a piece of crap. It's just amazing to me. These people, this progressive party, these people are just all about their agenda. They could care less about the economy.
I think the decision is going to be down on this. So, guys,
look at this.
So adjusted the range because taking into account some pretty relevant statements that he made. I think specifically that rate. To me, the biggest thing that he said here was what we were telling you guys in the video yesterday, is that credit tightening can replace rate hikes, which 100%, because at the end of the day, it's a form of tightening condition.
Yep.
So this will be the first time the 5-minute range trader potentially can flip here. It doesn't flip until the candle closes below the bottom of it, but this will be the first time it flips during this entire presser and initial rate decision announcement.
Hey, check out. I have a sold call on SARK 45.50 against my long position, and it's telling me that the value of it is $1.50. I got to go see if that's real or not, because it's like
where is your call? Where is it at?
If you could look on yours, SARK March 24th 45.50 calls. It's telling me my Okay, no, I got it now. No, yeah,
it's brother, that is a million miles away.
What's that?
It's a million miles away.
I know, and it's saying it's given a value of $1.50. It's got to be
right. It's a different expiration.
No, it's. I'm looking at it. I own it. It's giving me a $1,500 loss. It should be like in the 50 or 60 cents.
Bob, that's scary. That means the market's going to tank.
Yeah. So guys, strap in.
Okay, let me get you caught up on what Powell's been talking about here.
I got to go look to see if that's right or not. Anybody else seeing that? Or am I just like, maybe I think
it could be a momentary market maker issue, especially if other strikes around it don't reflect that premium. So you need to look at the ladder, Bob.
Yeah, I'm going in right now. I just noticed, I'm like, why am I down on that?
But if the whole ladder's lit up like that, then that's a very clear sell signal.
You know what it is, Phil? They pretty much, there's no trades on any of these right now.
The market makers took off, yeah.
They zeroed out all the bids.
You probably just have a retail guy sitting there. There's no market makers.
Yeah, it's all the bids are zero, and all the asks are at like $5.
Gold keeps pushing. Fed officials don't expect rate cuts this year. Okay, that's pretty important to know. Rate cuts this year aren't in our baseline expectations. We'll likely need below trend growth in a softer labor market. That's just more telling you, that's more recessionary type talk there. Gold's reversing. Watch gold as we get over 103, guys. That could really get squeezy.
We broke down below that reaction low, and now we're testing it from the upside.
So SPY went up, played with the upper end of the linear regression, and I wouldn't be surprised if we see the bottom of that. Bitcoin's finally pulling back here.
Wow, they're not letting people get cheap SARK calls into Friday out of the money. They just destroyed the entire OTM curve on these options. Wow. With these massive spreads. You can still get 45s though.
Yeah, so we're just getting a broader pullback. Now this is where like gold, has been outperforming. Bitcoin's been outperforming. But when you get like a strong, broad pullback, they will momentarily be sympathetic to that. And you'll see that too on a daily basis if we really start rolling over and we start gunning, because that's the one thing this market has not seen yet, is where we get a broad rollover, and we're getting close in my opinion. If we look at if you look at our past yield curve inversions, you look for the lows to be put in, and then you go 100 weeks. At the end of that 100 weeks, you're kind of near the end of the bear market. And so same thing over here, bottoms out 100 weeks into the bear market. We can project that here. And this is the part of the bear market we're potentially waiting to see have happen. And this is when everything's going to feel like worthless. And you're going to wonder why you bought digital monkeys for Ethereum when, you know what I mean? Like all the excesses of the last 2 years are going to be like, why did I do that? Down if we get this move, which the bond market's implying we will see that move. I think this is a very clear picture of that. So we'll see if we're
buy on SDS now.
What's that?
I'm sorry, I stepped over you. I will buy on SDS now in the hourly.
We'll end up pushing up over the next 100 weeks, and we'll get back to that. Once we get back to that 2.3%, then I think the bear's done. Gold pushing back, dollar continuing to reverse. We'll keep an eye on that level up there. Let's take a look back at. In fact, you know what we're gonna do? We're gonna set an alert.
Yeah, it's pretty cool, Phil. Every one of these trade signals.
Okay, so now that we've got the move, we're going to watch for the 50% area up here. Now, remember earlier I said I wouldn't be surprised if that was our range and we broke down, we'd come down to 4,000. So what we want to do now is take a look at that's liquidity, that line there. Let's see if they tap that, and then we get a reversal.
So Phil, I bought 396 strike puts when it was at 401, and we're at 395.90. That's how fast he dumped at 50 points.
Yeah, if we get back, if we do one of these moves back to the mid of the range, I'm shorting that.
Yeah, I'm gonna set a sell on it. It's beautiful. Now we just hit the hourly 144, Phil, on SPY and the moving VWAP. So if this doesn't hold, guys, then there's a gap we're filling, by the way. I just noticed it at 395.55. Below that, then we're looking at 388 area for SPY as support, FYI.
I think my favorite line out of today was tighter credit conditions can substitute for rate hikes.
It's called the Ode to Bob and Phil, the homage.
It's one of these, Bob.
What's that?
Pat yourself on the back. Okay, I welcome all investigations into the banking failure. This is Powell. Yellen, $2.5 billion is the cost of FDIC's SVB resolution, and that's only an estimate. The final cost is unknown. Powell says he's well aware of concentrations in the real estate market, in the commercial real estate market, Don't think it's comparable to the other bank strain. The fiscal impulse is not driving inflation right now. Yellen says we're not considering insuring all uninsured bank deposits, because they were calling for that potentially. If we need to raise rates higher than expected, we will. That's Powell. Yellen says the failure of a small or community bank could trigger bank runs as much as a larger bank failure. Yellen says not considering broad increase in deposit insurance. I guarantee you they will. That's my prediction. Everything she says is wrong. Powell says the recent liquidity provision that has increased balance sheet size is not intended to alter the stance of monetary policy. So he's saying, don't get your hopes up. We're not blinking. We're going to stay hawking. We're going to raise rates. So, we'll see. You're going to get a pause. It's always before a recession, and the bond market is all but guaranteeing you guys are going to see a big fat recession. And that's what credit tightening means in his speech. And the market knows that, and that's why we're going down. Yellen says we have not considered to discuss anything to do with bank insurance or guarantees for assets. First Republic CEO, that's the bank that's been in trouble. The executive officers are to forego 2023 bonuses, as if that's something noble.
I know, just crazy.
You actually had to say that? Okay. But that's how messed up that business is. Powell says our supervisory team was very much engaged with SVB and escalated issues, but we need to try and understand how the bank still failed. I thought that was pretty obvious how they failed. Well, maybe he means like, why wasn't there a risk officer, there? Like, I think that's why. Like, what were the structural things that led up to like nobody hedging that position? If we need to raise rates higher, we will. Depositors should assume their deposits are safe. So on one hand, he's saying, don't worry about it because he doesn't need a bank run. The other hand, Yellen's over there saying, well, we're not going to insure everybody, but it's nonsense. If the Fed doesn't want a bank run, you're not getting a bank run. So, and remember, At the end of the day, Yellen's from the Fed spoked wheel, so she's just in a weird spot because she's got to answer to the bosses in the White House. Fed says the takeover of Credit Suisse seems to have been a positive outcome. Depositors, we already said that. Unemployment rate estimate for this year is a highly uncertain estimate. We have the tools to protect depositors and we're prepared to use them. So again, he's saying don't sweat it. You're going to be guaranteeing it. So at the end of the day, they're going to do it. Recessions tend to be non-linear, so it's very hard to model. In other words, let's talk about a recession and let's tell you that we don't know exactly how deep it's going to be. This is how they do it, guys. He didn't say, now he's talking in terms of like, well, the recession, if it happens, it's hard to say what exactly. Before this, what were they saying? They were saying recession is not likely, not in our forecast.
Yeah. Hey, Lee, just check to see whether or not you have Skype muted on your live stream. Everybody else can hear us, right? Apparently people can hear us because people are complaining about the alerts going off. So just check your...
I can fix the alerts going off, guys. Give me 1 second. Sorry. It's like remember the Sasquatch commercials?
Yeah.
Sorry.
Where are you turning yours off at, Phil? I have to turn mine off then too.
Just mute the tab. Just mute the Trading View tab. That Sasquatch commercial is the bomb.
Yeah.
Sorry. And then Sasquatch just gives them the old toss off the side of the hill. You know what's happening to this market? It's in trouble.
Jerry Cobb, you got that right. Now, that is allowed. Carbon monoxide detector at 3 a.m. You want to talk about getting out of bed in a New York second.
Here comes that retest I was talking about. If we're correct, we should not go back over this high at 40.73.
Look at that Darth Maul candle on the 1 hour on SPY, Phil.
Yeah.
All right. Now, which is really interesting, Phil. So we broke into the channel, but we did not get a heat buy. Isn't that interesting? And we just came back to the 144.
I still think we're going to come back up and retest the midpoint here. Let's see what old Jay Powell is saying now. Powell says MRA and MRIAs are serious matters. Other measures of bank lending show some more tightening. Financial conditions tighter than indexes indicate. So what he's saying is that the market's over its skis. All right, press conference done. That's it. So our range is in. So let's see what the commodities do. Gold going back up. Bitcoin dunked. Didn't quite get to the CME close yet from last Friday. That's the CME futures on Bitcoin, 5 p.m. close. We got to it over the weekend. So the weekend made a low. A lot of times when we're in the vicinity, we'll see the market get that weekend print. So let's see if they get that, and then that concludes this push down, and then we get a wick back up.
NVIDIA is back in the channel again, Phil. It's FYI for folk, and it's falling nicely now. SARK fixed itself, Phil. That negative by minus 10 by sold back to 7 cents versus $1.50.
Gotcha.
So that's done. It was just the weirdest thing. The market makers just basically said, we're not letting you guys trade anything this far out of the money. Or maybe the exchange forced their hand on that. SPY's back to flat for the day.
This is pretty standard here. Breaking the one side, come back, retest the mid. They've been doing this a lot. Now, what would be highly unusual is if we take out the high.
Yeah.
We look for failure here somewhere in this area. You can even go 3/4 of the way. You can even go back up into here, 40.66 even.
Should be an interesting last half hour, Phil.
I don't need to hear the alerts. They can just pop up as on my screen. I've they're not that loud on my end, and I hear them so much it's so used to them. So, but I'll make sure they're off.
Phil, I'm listening to you, the YouTube side. I'm listening from Skype, so I can hardly hear them.
Yeah, it won't be an issue.
Yeah. I think, Phil, we don't like it when the market goes down.
I don't exactly like when the market goes down.
Now that we're waiting for this market to roll over here again.
All right, Mr. Market, is that it? Did we get our 50% retrace?
Yeah, not looking good, Migo. Not looking good.
Was that our 50% retrace? Could have been.
Yeah. Well, they're hovering this thing right on the 144.
I think cryptos are going to I just think the whole thing has, if you've gone through 2018 and you saw like the alt BTC market just go flatline in the gutter, we really haven't had that yet. And I think it's definitely going to come, especially for a recession, because the crypto market's never been through a recession truly. These guys that are buying these NFTs, and a lot of that stuff's probably wash trades, but if anybody bought NFTs in this market, they're probably going to take on a lot, not all of them, but on a lot of them, they'll probably get a 90% haircut. It's not the market segment you want to be investing in when we're going to be heading into a recession, because the things that fall the hardest are the things that are the most speculative. And believe you me, NFTs are the most speculative outside of like some, dodgy altcoins.
Yeah, I mean, just as a general rule, guys, you only want to own things people have to have. So, and people need on a regular basis. I.e., think plumber, don't think massage therapist. Okay, it's just gonna be one of those things where people are gonna have to give up travel. They're gonna have to give up all the things they like to spend money on, and they're going to be stuck with things they have to spend money on because they're not going to have access to credit, and they're going to have to retrench. So there you go, Phil. We're breaking down below the 144 now. Were you hoping for higher to get short? I'm short. So
No, it did it. I mean, it was in the zone, right?
Yeah.
Got to almost to 40.50 exactly. This should take out the lows now for right, and you saw the highs for the day. Maybe the highs for this move.
could be really interesting. I mean, he used basically the neutron bomb of Fed policy. We're just going to not give you access to credit at all.
Yeah, I think Bob, they made that decision a long time ago, but they weren't gonna. They just had to kind of like they didn't want this getting out of control to the downside. So if I'm looking at this from Powell actually doing the right thing, he's doing the right thing. He's not getting super aggressive, but he's boiling the frog.
Yeah, see, they could dial this stuff now without having to touch. Because he said he may not even raise rates anymore.
Well, they said that it could replace raising rates, but they said that rate hikes are still on the table. You don't know because that's data dependent. He didn't say there was no more hikes this year. They said it was on the table. I think that you have to go off of if the market's really down from here. Let's say the market's down 25% at the next Fed meeting, they're going to pause.
Yeah, but he doesn't have to do anything more to fiscal policy. They can just whisper to the bankers to okay, give more loans, take more loans away, and people are going to lose their basically their navigation stones here.
Yep, and the big 8 are in the club, and they'll be like, "Yes, boss." The regionals, they're out there. They're like, "Wait, we gotta borrow. We gotta loan money. We only make money a couple different ways."
Yeah, and they're gonna be like, "Sorry, you can't lend any money out."
It all makes sense. All right, so we are pushing back up here.
I'm staying short overnight to Robinhood. I think Phil is too.
Yeah, I think so. The only thing that would change my mind drastically would be taking out the range high at this point, which would then tell me we're probably going to run up to 40.95. But if they did that, that's something that they haven't done in any of these FOMC announcements. It's always been establish the range, pressure's done, you get one side breaks, go back to the midpoint of the range, which we've already done more or less. I mean, you could still push up here and mess around up here, but largely you're looking for this area to fail and then take out that new low.
So don't forget to tell your friends about us.
Yeah, if you guys, biggest favor you guys could do us is to not only subscribe, but put the notifications to all. That makes a huge difference.
Okay, where am I at here?
Thanks, Robinhood. Cosmic, yep, that's exactly right. Cheap credit fueled the COVID bull run and fueled it all the way into the end of 2021. Then they started, the Fed basically said we're tightening. They started rolling out their balance sheet. So you were coming from a place of extreme excess. If you looked at like where the balance sheet was and everything like that. So it didn't take much for that to stop, turn the spigot off, and the market started to react pretty quickly. Then Yellen drove up her balance, which was more bearish, and that's going to happen too after the rate. Don't be confused if the debt ceiling gets raised. I mean, eventually it will, one way or the other. But don't be surprised if that turns into a very bearish event after the raise for the market, because by default, she's got to play out catch up with her debt issuance, right? She hasn't been able to issue new debt, and that's a problem. And so her balance in her checking account is going to go straight up in the air, and this market doesn't go up when that occurs. And it would be very similar to the beginning of 2022, actually. That was not a good patch for the market. All right, so our take is short into that halfway mark, and we'll see what we get now going down. If we take out new lows, things are going to get interesting. Kraken just announced that as of March 27th, they will be unable to support ACH deposits and withdrawals, FYI. They're working to make ACH funding available again as soon as possible. You'll no longer see a deposit option via Plaid or withdrawal option via ACH Silvergate. No other services will be affected, including ACH instant purchases via online banking. So these on-ramps, it continues, right? They're choking off the crypto on-ramps for fiat. That's by design. You guys do realize Fidelity and those other guys are firing up their own exchange, right? Fidelity, you can trade now on it. You can't withdraw at the moment. That'll change. But they saw what FTX did and how fast that grew. They want in on that. They know that retail is a bunch of degens. Don't be surprised that we see something very similar products to what FTX was doing in the Bahamas. Don't be surprised if they allow that eventually to be run by the big banks. That's how they're going to play catch up. We're getting negative ticks, so broader market weakness. Rejection off the linear regression there on SPY, which is the ETF for the S&P 500. Bitcoin continue to push down lower end of the range, kind of looking for this area here in Bitcoin to get swept, take out maybe that low there at 26,610. We'll see if this turns into a bear flag and we get another push down and see if we can sweep this level. So far, very textbook move, range established, break one side of the range, pull back to the midpoint of the established range off the announcement in the presser, reject off that. You look for this eventually to follow through to more downside and not breaking out over the top here. Sometimes they can push up into it, like up in this area, for example. You get up at as high as 40.67, but this would be more textbook failing there and then just the inevitable decline.
So this is a nice roll down, guys. So
yeah,
Phil, I'm good till 5 to 1. So I got myself already ready. So
all right. Well, the pressure's done. I think we'll just, it's already 3:30. We'll just run this into the close and then we'll sign off.
Yeah, I'll start looking at some charts here. If you guys want to, because I'm already set on my trade. This bombs away in the markets here. So
yes, now we want, please die.
I'm going to go look at charts here and I'll call out anything interesting, anything hitting pattern. So you guys are lucky. You guys aren't trading with us yet. If you guys have a service, join our service. I'm serious. A lot of our customers are on here. They'll tell you, we think we do a pretty good job. We definitely have the technology to help you. That's one of my other signals. Sorry, that one stayed on. Maybe you guys didn't hear it, but
I got a signal.
Yeah. So I'm pretty stoked, and we just got some new technology we're gonna be unleashing here pretty soon, and that really high hit rates.
So 40.16 is the weekly 9 EMA. We're technically below that. Bulls lose that. It's another case of them kind of fumbling the football. The bigger one is going to be the the daily 200, 4,006 to 4,009 area. We have already probed that. Let me get my other chart up so we can take a look at that.
Yeah, if I see something interesting, Phil, I'll yell out if you want to throw the chart up. So
say we bounced off the daily 200. This is where bulls need to hold. If they're going to hold this, they want to close this week above the weekly 9 EMA, in my opinion. So if they start losing this again, we fall back down. This represents the big bearish trend line. So bulls had an opportunity. This up here is the weekly. This line here is the weekly 50 up at 49.50. That's exactly where we came up just now and back tested. We poked our head above there.
Whoa.
This is where bear markets end, is when you get a trend over that, in my opinion. And I give them credit. They spent a lot of time trying to bang and get progress over the weekly 50. They just haven't done it. So
big pullback on Bitcoin here, Phil. All the Bitcoin related stocks have hit top of channels and they're pulling back. I'm not saying they're bear markets or anything on those, but we're getting big pullback. Biddy's up, Box down, Bitcoin's down. Just
getting closer. 26,995 is the low so far.
We're drifting down. If I find any more hourly sell signals here. Okay, if you guys are into the new Green New Deal, charge point hit a resistance and it's pulling back. Oil still grinding. Coinbase, beautiful sell signal on that, Phil, today. We're getting paid on our credit spread.
All right, let's see what DXY is doing. DXY has got to be pushing up. Yep. DXY has got this like slanted inverted head and shoulders. So what you look for is this neckline to bust, and then you'll really start seeing the markets under strain.
We're getting a little bit of a drift up here now on SPY.
Yeah, SPY very rarely just waterfalls off. There's always usually some push back up higher. People are trailing stops. This is why this stuff happens. If you really want to get down to the nitty gritty, you look for spots like, there's a candle gap, usually they'll come back up and wick into those. You got an area here where this breaks, sometimes they'll leave that behind, but if there's a larger sell program, this stuff will be left behind. Otherwise, they'll come up and backfill areas like this.
GlaxoSmithKline hit resistance.
See if there's any overnight. So we have this overnight low or the swing low from the previous day, 4,350. That's the kind of stuff they'll start seek and destroy. They'll go and get it.
Gold miners are holding up better than Bitcoin miners. Mara pulled back pretty aggressively here, so timely exit on our part.
I'm just marking areas of inefficiency on the chart that will likely get backfilled on the way down if we keep pushing down.
Nvidia's back down to 270 here. Absolutely ridiculous.
All right, so let's see if they push down at the bottom of this initial range here. Sometimes see that they get that little reaction there. Guys will scalp that right there. We're struggling at the weekly 9 EMA here, 4016.50. They're battling. We lose that, we'll push down, probably try to retest that daily 200. We lose a daily 200, then we'll probably see broader push down, probably get down into the 3990s. So far, defending the bottom of the initial range of the FOMC announcement and presser.
Should be an interesting close.
Bitcoin's not like nuking, it's not like just huge move. They're just kind of steadily walking it down. This looks like a little bit of a bear flag here. Let's see if it pushes down and takes out the lows. We'll stay on for about 15 more minutes, guys, until the closing bell.
Lee, I'm getting another T-bill 1st of April. So, and then I'll be fully positioned on that, and I just can roll them every month. I'll just roll the one that's coming off. Yeah. Hey, Devin, we try to, the nice thing about if you're trading in the rooms, we just give trade signals out too much. The VIP room is it's like this, a lot of interaction. You can actually get to talk too. Once you pick up the lingo, it's not very difficult.
So breaking below 4,006 to 4,009, my next level is 39.95. I believe that's a gamma, area of gamma. And then below that, 39.84 is our last month's low. This market ain't happy.
Mr. LB, you can do everything from an iPad. Trading views on an iPad. And the trade signal, it all depends on your broker. If your broker has an iPad, mobile, you can do that too. All right, Phil, we broke 396 again. Let's see if we can break this range. All right, Marie, we're looking forward. They're going to hold you to it. Just make sure you check the specials before you join, okay? We always have something running, so my marketing company always puts something out there for you guys, so always check it out. No need to buy at retail.
I don't exactly like when the market goes down.
But we do now because we're short.
Yeah, but that guy never likes it. He's not short.
No.
It's a little harsh.
I didn't see him in the room.
Probably selling mansions or something.
He is. He's the only city in the country that has real estate going up in price, which is amazing. He's on. Bruce is one of our longtime customers, but he's a realtor.
I don't exactly like when the market goes down.
He's a realtor, okay? A professional real estate agent. We have a couple of them. John Smith's a realtor too. So if you need anything in the Ohio area, look up Bruce. If you need anything in the coastal Carolina area, look up John Smith. Anybody else can I advertise for while I'm here?
Guys, we're going down.
And that's not how you look either, Bruce. Oh, man. Guys, we have a lot of fun trading the rooms, too, so it doesn't have to be boring. It doesn't have to be scary. Phil, did we break the low? We broke the low, I believe.
Bro, we are going downtown.
Yeah.
So we cleaned up some tape here. We'll get rid of that. We got some more tape to clean up in these. I marked these areas where, we had tape cleanup. This is from the other day. We took out that swing low. Remember I told you guys 4,350? So we took that out, take that off. Oh, let's see. We got tape above here, some skinny spots in the tape. Clean that up. Potentially, these are areas where you could get a wick back up, and all they're doing is just kind of repairing like some skinny price action. It's not changing the move per se.
Hey, so I have the 396 puts on for the 27th of March for you guys listening. I'm rolling mine down to 394, so I give you position to credit spread them if the market decides to do a reverse. But typically, the follow through on Thursday, we should have a weak follow through. So this was not a bullish presser anyway, shape, or form.
No, he did. Bob. The discussion was, will he flinch? He didn't flinch.
No, he didn't flinch, and he said it in the nicest way possible. So you can't call him a jerk. But guys, we need this. What's happening, we absolutely need this if we want to have a future country.
Love him or hate him, he's doing the right thing.
Yep.
And he's doing it in a very measured way. And I think that they panicked off of COVID. I think his biggest mistake was pumping all that money in COVID and not stopping. That was an egregious mistake, and it pushed us over into inflation. So let's say, okay, they misjudged that. He's doing what he needs to do to correct it. And he's also going to be taking heat because this is stuff that Bernanke should have been doing. He didn't do. Yellen should have done. She didn't do. And so he's going to get it done. And I would have more respect for how he's running the show than those two. Bernanke didn't do anything. What's that, Bob?
No, I'm sorry, I cut you off.
No, I was just going to say Bernanke didn't do anything earth shattering. He just printed.
Yeah, these guys, Bernanke and Yellen, they're progressives, and they had a progressive agenda. And to them, they haven't. They're MMT people. Where Powell is like he's allergic to MMT. And you got to read the Martina Booth article.
Tell him what MMT stands for.
What's that?
Tell them what MMT stands for.
Monetary money theory is where there's no such thing as government debt. You just keep printing because, quote unquote, your productivity will outstrip your debt costs infinitum. It's just a bunch of crap. And dump it again. But she talked about Powell. He's been getting hammered by the left and the progressives and the globalists all along. And so, if you believe in liberty and you believe in nationalism and you believe in being on the right side of the liberal conservative and the non-deep state side, you want him to succeed here because they've been using the Fed as a piggy bank for social agendas now for the last 15 years, and it has to stop. It has to stop or we're screwed. If it causes some pain in the meantime, I know at least Phil and I, we've been warning everybody we know for a couple of years now to get your house in order because this is going to be painful. Either we control it like he's doing, or it's going to happen out of control, and then it's really that'll destroy everybody.
We need to get it done. We need and the best outcome would be a controlled descent.
Yeah, because he can always dial this thing in and create a short squeeze here and there and stuff like that. But a liquid assets you're kind of screwed on. So you got to be really, really careful. And look, I own a nice house with a huge appreciation that probably when this is all said and done, I'll lose a lot of what we gained. Okay, but it is what it is. The house is where I live in. It's not a piggy bank for me. But if you're long any of these things, you got to start checking out your portfolios now, guys. Start going through those ETFs or mutual funds that your RIAs have and get out of them. Force those guys to make changes because you've been given a gift. This is the most telegraphed market crash in our lifetime.
Yep.
Okay. Nobody's going to have an excuse. I'm rolling down my thing again, Phil, 394 to 393.
Beautiful.
And guys, I'm gonna drop off in 5 minutes. I actually have to do a interview, and I'll plug. If you guys ever listen to SGT Report, he's kind enough to interview me today, and so I'm sure a lot of you guys know who he is. If not, it's worth a listen.
This is another swing low we're coming into, 39.8175. You'll know it's a big sell program if you don't get any reactions to these levels and it just kind of steamrolls through them. 39.95 is a significant level. What I'm looking for, maybe take out this swing low and see if they try to reclaim 39.95. Okay, that's kind of like a line in the sand for bulls. Let's go look at our other charts here. So we broke through the daily 200. That's a significant break. This is a 1 hour bar. Let's take a look at how the 4 hour bar looks. Bearish engulfing type candle coming down. This zone here, normally you would get a reaction at these areas of conflict on the way up. You'll notice it's just moving right through that. If it continues to do that, then this is rather broad selling. These are sell programs executing institutional size. Institutional selling does not care about technicals. They just go sell it all.
This is what an AMF market. Adios.
This zone here was what we broke out of, and I was saying that in the room was that once we start breaking out of this consolidation zone, we can squirt up here into the announcement. Exactly what we did. Now, if you're bullish, you don't really want to get back into this zone, this 39.6850, because what that does is that lights up not only a back test of 39.30, but taking out these lows from last week, 38.69. So it can happen very quickly.
You guys check out NVIDIA, guys.
This
down
market
$10.
this is starting to look like free fall territory. DXY is breaking out of that head and shoulders on the 5 minute. Remember, you guys, we looked at that. This might be one of those deals where it gets funky after the market closes too.
And we've seen that before. Phil and I have seen a waterfall that started at the market close and went all the way through for the next 2 or 3 hours. So these guys can trade sometimes after you can trade. So you can really be trapped here.
Watch this area here on Bitcoin for this to hold. And if it does, we could get a bounce back up. So we have a somewhat of a wick here. Sometimes they'll hold that. This is happening around a swing low too. You'll notice when you see this wick here, we're looking at a 1 minute chart, but we have a lot of volatility, so we can do that. You see how it wicked through the previous swing low? This line is the previous swing low from way back over here. Okay, that swing low. That stops getting hit. That's retail getting hit. So there's probably larger orders buying that, and they can make a quick buck on a move up.
All right, Phil, I'll catch you guys tomorrow. I'll see everybody.
Okay, Bob, take care. As long as this market's being volatile, I'll stay on a little bit past the close if that's okay with you guys. If you guys want to knock it off at 4 p.m., just let me know in the comments. Otherwise, I can stay on a little bit longer. Nice job, Tracy.
Buy SARK for a down market trade. All right, I'll see you.
Thanks, Bob.
Thank you. Bye-bye, Phil. Thanks for doing this.
Yep, no worries. Yeah, Vladimir, I think that there's a good potential for that. And primarily it's simple, right? Because this is what you need to look at. You need to look at your higher time frame chart and look at what happened here. I mean, that whenever you get a candle like that comes down like this, that's you basically took out stops and you've engulfed lower. Okay, that's super bearish. You're not stopping at any of these locations where you should probably have an interaction. You're just like this big lava flow through it. That's broad institutional selling. You did not get filled. Bummers. Yeah, when it got back up to that 50% retrace. So you guys see the game, right? Like I was going like, all right, what things change in the market, seasons change, but I was like, okay, what's the current algo gig? Current algo gig is establishing a range off the presser in the announcement. It was a little bit confusing in that the other ones had a big range established right off the initial announcement, and then we kind of grinded around. The presser finally filled out the range. Then you're in the right range because it breaks. The side that it breaks is the side you go with. But I've seen them break it, come way down and come back up to the mid and even past the mid. But this is what you saw today was super textbook. I think we did a pretty good job of calling that out in advance. And once you get up in this area, there's an old saying that says, don't be a dick for a tick. And you can't, you know what I mean? Like it's hard if you're just trading like one micro or something like that. You don't have the luxury of adding more if it goes up higher to get an average. But once you're in that ballpark, in this vicinity, that's good enough, So now we're cleaning up some of this overnight tape. Here's that other swing low. Okay. So these guys bought that. There's going to be, let's see if we get a similar wick like up here. Yeah, we're getting weak into the close here. So I'm going to stick around for a few minutes and see if this continues to waterfall. Because if it does, guys, I've seen this thing roll off another 40 points after the bell rings. If it goes quiet, then we'll wrap it up. We'll take one last look at the big picture. What's Bitcoin doing? Bitcoin's in the hole. It's in the zone. Took out the CME close like we thought. Now we're going to find out if this area is going to hold or not. Very bearish candle here. Very bearish. You notice we got back to the top of the consolidation range. This is just like kind of a rough area. Notice we're bouncing right off that though. And that's not surprising because you battle. Look how much they were selling there, right? A lot of this is hedging and stuff like that. You notice they were selling, come back to the bottom of the range. So it makes perfect sense on a back test basis to come back to this area that was battling before. And you're going to get some kind of lift there. Coming back to the middle of the linear regression band on SPY. Let's take a look at what Bitcoin looks like on that. Ooh, broke right through that bad boy. We are getting a lift though off that area. It would be pretty bullish if Bitcoin reclaims the hourly linear regression bubble. See if we'll get another regression buy. All right, MDH, thanks for watching. See, we're not getting, I don't know if you guys noticed in the markets how much you guys look at the intraday data, but it's, like the move here, we're not getting like the other week, a lot of V reversals, and we're just not, this is the type of move when an institutional sell program is running. You're not getting much reaction off these swing lows at all. Here they front run it a little bit, but that's the kind of stuff, that's the behavior I look for. How willing is this market to buy, or is it just getting overwhelmed by big sell pressure? I think today's comments by Powell basically said, we're staying the course. We're going to keep hawking and we're going to tighten credit conditions. And when you tighten credit conditions, you don't have cheap credit anymore. You're taking away a lot of fuel for the stupid risk taking in the market that drives things up like what we've been seeing in tech. And also you get these big rallies in bear markets. Okay. But to me, it's very, very key when you're in a bear market. Now this is a 4-hour chart. So I have the higher time frames here, but very important. This is the weekly 9 on this red line. You'll notice the market could not really establish over it. They tried that. This is where the bulls could have really turned this market, go from a bear market to a bull market, this kind of stuff. Losing that, and that came off the CPI announcement. And that's another thing too. When you see a broad move up into a big announcement, okay, usually that's a sell the news event. Same with today. Today was FOMC, run up into FOMC, and boom, sell the announcement. That's the game these guys play, right? That's the big money games. They're shorting this market. They're selling the pops in this market. They're making hundreds and hundreds of millions of dollars shorting this market. So what I believe is going to happen here, big picture, as we kind of start wrapping up the day, we're going to come back and we're going to back test this weekly 200. Okay. If you guys were paying attention, let me turn off. If you guys were paying attention, this is basically what saved the market back when we dipped down into October, the weekly 200. Okay. We bounced, we had a dead cat bounce, looked like we were going to lose it. And all of a sudden we had this like just immediate reversal. We were in the room that day, immediate reversal, 50% retrace, basically off to the races. That was our bear market lows. I don't think those lows are going to survive. We're going to take out this low down here around 35.73. I believe we're going to take that out. What I think will probably happen is eventually we'll work our way back down. We'll get another back test of this weekly 200. We'll probably get a sympathy bounce, and then we're going to watch. I think it's going to break this time, and we're going to cut through that, and we're going to gun for these lows. I think that's what's ahead of us. I don't know the timing on that. Don't ask me. I just, broad picture, I think that's what's going to happen. So, as you guys can see, battling still here, but they're still pressing on it. We haven't had a huge reaction off this previous consolidation area. And once we start accepting back down under this 39.70 area, it's going to light up target of 39.30, and ultimately we're going to sweep these lows down here. These wicks, they're going to get cleaned up. Here's another wick, 38.24. They're going to clean that up. They're going to clean up. This is the one I've been waiting for a long time, 37.72. So going forward, and that's going to take us right. Notice that swing low that never cleaned up back here coincides now with the 200 weekly. Interesting. So confluence of levels. It's important. Okay, so that's a spot I was highlighting. CME close, bottom of this range on Bitcoin, getting a little bit of a bid reaction in here. At some point, you want to see something in here hold. Just no reaction. Notice they're front running this swing low here a little bit. I want to see if they just puke right through it now. We'll see. Again, our stance is you're short. We shorted that. We shorted up here in this range. This move here with not much of any kind of bounce, broad institutional selling, in my opinion. Bill, yeah, I think you got to have a hedge on. Yep. I think when you get the market reaction like this, if you look at previous announcements, go back on the charts, look up where the previous FOMC dates were, previous CPI dates were. And when you get that textbook reaction like that, this usually tells you that we got more downside coming. Let's look at gold on this is a linear regression. And just, it's a measure of standard deviations. Gold's doing much better. I think this might be foretelling what's coming for Bitcoin. Bitcoin will rotate back up. Gold looks really healthy though, guys. Did we take out this low yet? To the tick. There we go. There's the break. All right, let's see what we got below us here now. Got another swing low. Got another swing low at 39.54. Tape looks pretty clean all through there, actually, surprisingly. These bands are just our bait. It paints an area of resistance and support. So in case you guys were wondering, that's our Ranger buy and sell indicator. Just marking these lows, marking areas of inefficiency. Here's an area that needs to probably get cleaned up. Actually, no. All right, so that's just marking levels below. Everything else looks pretty good. That for now. So market's starting to peter out a little bit here. So we might be good to go for today. A little bit of cleanup overhead. They could probably take care of some of this stuff up in here, but I think damage is done today. This is an ugly 4-hour bar. They're respecting the top of the consolidation range, but overnight we start losing this 39.68 area. Look for this to come back down, test the midpoint of this. In reality, probably the midpoint of this whole entire range. Do this, something like that. 39.20, and then look to gun and take out 38.70. Again, that means as long as we accept back into under 39.70, 68 to 70. So I think that's pretty much going to do it. Again, very bearish for our candle. Bulls blew it, lost the weekly 9, lost the daily 200, poked their head up over the weekly 50, got destroyed. Just not a good candle here. So we lose the 30. If we don't hold 38.70, we're coming down and we're going to test the weekly 200 at 37.75-ish going forward. Okay. Bulls desperately need to get at least back over the weekly 9 EMA to have any chance of salvaging this. I think the daily 200 has been stepped on quite a bit here. So weekly 9, if they can do that and get support over that and take a stab, another run at the weekly 9 or the weekly 50 SMA above 40.50, they might be able to salvage things, but they're on the ropes. A lot of damage done here on this move. So I think odds are we're going to get back into this range and probe these lower levels. Nothing in a straight line. Obviously, there going to be some gyrations, but to me, kind of sell the rip type of reaction at this point. So I hope today helped. If you guys are interested in getting in a room with us, this is very typical what we do in the VIP room on a day-to-day basis. So check it out. head over to tradegenius.co. And I appreciate you guys watching and tuning in. And you guys have any questions before I head out? Thanks, Charlie. Thanks, Joseph. Thanks, Marcio. Thanks, Nick. Yeah, Mark, I agree. The pain hasn't started yet. Thank you guys. Keep puts. Yeah, Bill, I think so. You want to give yourself enough time on those options. That's why we like futures, micro futures. You can sit in them. There's no decay. I mean, there is a little decay, but not like you get the theta burn you get with option. So micros are a great alternative to puts. FE Matt at tradegenius101@gmail.com. He'll get back to you on that. Joseph, all right, we can look at Bitcoin real quick before we go. The way I look at Bitcoin, this is like what I would consider a level 10 retracement rally. And what I mean by that is there's just nary a pullback, right? You're high and tight on these moves. I believe, as I was telling some of my students, that wave one, this is like the second push. This is not abnormal to get this type of pullback. If you can get a $2,000 pullback in a level 10 retracement move, that's good. Notice we're bouncing off that CME closed zone, right? Respected. That's what you want to see. Now we want to see this thing pretty much follow gold, get right back up, reclaim. We start getting back up into this area. I know I got a lot of lines drawn in here. These are just some reference points, but ultimately we'd be looking at 32, almost 32,400. And then I think I would expect it to consolidate and range in this area, because ultimately at the end of the day, what I think might be happening here, and you can see it on a weekly chart, is you could potentially be getting what we would consider a parabolic structure, where this is base number one, and usually you get 4 bases. So we come up here, we consolidate up in here. This is base number 2, and you do it again. That would, that's the structure, obviously that would imply that we could go much higher. Typically in Bitcoin's bear market retracements, you're going to get the 50% retracement or thereabouts, 42,310. We blow through that level, then yeah, we can go. Remember, there's a paradigm shift in Bitcoin. It's now transitioned from risk on to flight of safety or safe haven. Okay, so this isn't like, the dynamics have changed. So you have to be open-minded about what that means for Bitcoin. And as you guys know, when the demand imbalance goes to the demand side versus the supply side, moves can happen very quickly. I mean, look at the move in September when we, from September 2020 to 65K. I mean, you went October to April, like nonstop. These are weekly bars, week after week after week after week after week. All right. Bitcoin's illiquid and emotional. And you just have to understand that when you get big weekly bars like this, don't step in front of the freight train is all I can say, especially when you clear big weekly levels. I've talked about the 377 EMA on the weekly. That's very important. And when you have a $5,000 weekly candle that blows through a level like that, a level that usually is the gateway between the pre-halving run and bull market bottoms, you got to respect that. So yeah, usually you're going to get 3 pushes in a move. So if you look at the hourly chart, push 1, push 2, let's get a third push. I would say this pullback holds, consolidate. We get that third push up into 32.9, somewhere in that area, high, 32-ish. I'll get more exact as we get closer to that. And that would put a rest to this initial surge. Then it's going to get interesting, because then we're going to see that we get a second. This would be 3 pushes and a first push. See if we get a larger second push. That, if we're going off this size of this move, that should take us into that midpoint. Yeah, Mark. Yeah, I believe so too. And it's going to outperform, because there's only 2.5 million on the exchanges at this level, guys. 27,000. Okay, 27,000. When we were at 27,000 back here, to put this into perspective, when we were coming up through this level back here in what was this, December of 2020, you guys realized there was 450,000 or 400,000 more Bitcoin on the exchanges. There was 400,000 more in supply on the supply side than we have here. So that's going to make these moves through this level a little easier than what was going on back here. Just keep that in mind too. Now, as of late, there has been more coin coming back on the exchanges. So I think some of the larger whales are probably positioning to sell into this move. And it wouldn't surprise me if they're not going to move all the coins at once, but I think they're legging into getting ready to maybe fade a move up into this 50% retracement area. So I could see that happening. You blow through that though, buckle up, because it wouldn't take much to attack all-time highs. And that's something nobody expected. And one thing you can count on with Bitcoin will turn when you don't expect it, and it'll make moves in sizes that you're not expecting both ways. So I don't think too many people are calling for, some people have called for an all-time high this year. Not many though. I think prevailing sentiment is that that's not happening this year. But things have changed with switching to gold, more of a risk or safe haven asset. That changes the game for me. So I am open-minded about that stuff. But realistically, I think 50% retrace would be pretty normal expectations. But you also have to be mindful that if it just starts marching through that, buckle up. It could also take out this swing high too, 48. It's all about leverage, guys. We start doing this. What's retail going to do? They're going to start looking at the all-time highs. Guess what's going to happen? You're going to get a big liquidation break. Could be $5,000-$6,000 liquidation break and wipe everybody out chasing the move. That's Bitcoin. That's what this was about. 25 to 20. What we weren't expecting was this immediate V reversal. Once I saw that and we're challenging the right back to the highs, I was saying, all right, the game's changed now. You get on and ride the wave because Bitcoin, these moves are extremely powerful. All right, so that location I circled here, I haven't moved that circle, bounced. Now what we need to see is a higher low, because right now people will be looking at this like, oh, this is another bear flag. We're going to take out the low. It could take out the low, but generally speaking, this looks good. Even if we poke a new low, as long as we come back in and hold and we get some sort of like inverted head and shoulder structure, or maybe, like an Adam and Eve structure where it's a V reversal and a rounded secondary bottom, something like that. But largely, I'm looking for reasons that we get a higher low somewhere in here and then, go back up, get back into this area of consolidation would be very bullish. And then you can make plans to attack. Remember this level up here I talked about? It was kind of like that double top on the 5 minute. Go attack and take that out, 28,950, and then turn that into support and finish off the move into 32. So I'll leave you with that. And I think that's going to do it, guys. I think we've seen the damage done. We'll see how this week plays out. There's your little dead cat bounce. So market volumes died off. We'll watch overnight. Watch your Asia session. Asia opens at 8 p.m. Eastern. Watch your London session. London opens at 4 a.m. Eastern, because we're in between daylight savings times. It'll go back to 3 a.m. Eastern. Obviously, that's late overnight action, but if you're up watching around those time zones, that's when you get market moves, and watch what happens. Asia runs for about 3-4 hours of a window after 8 p.m. Eastern where it matters, like 4 hours after that, and then watch what the range is in those areas. It's all about ranges. The market likes to establish a range, and then it likes to take out the ranges, So other than that, come on, we don't. You can definitely check it out for a month. It's not that expensive, but it's just too much on the back end. I don't deal with the back end. Bob and those guys do, but it's just too much to set up for, because when you're getting on, there's permissions for Discord and a lot of other things. It's not like just, it's a little bit of an overhead nightmare to do free trials. So, but the monthly just to check it out is not that expensive, and the annual is a much better deal. Yeah, you can trade anywhere, doesn't matter. And the newsletter too. Anyway, but the newsletter basically takes the levels and it spells it out for you. I was going to try and show it on the what do you call it here? Yeah, so Bitcoin, nice bounce reaction. Want to get back over Monday's low, 27,200. Do that, and we should be good to go to get back up into this range and backfill this spill. That would be very bullish. Gold looks real healthy. Gold's all you need to know. Let's take out that swing high, start pushing for new highs. What's the weekly look like on gold? Yeah, that's, as long as we don't take out this swing low, we take out these highs, buckle up. And it's got a good shot at doing that here. So, all right, guys, I think that's going to do it. Thanks for tuning in. And we'll do this again at the next one. All right, guys, signing off. Thanks for watching.
Trade Genius.